Did you know that workforce housing continues to bridge the gap between subsidized housing and market rate rents, providing essential living solutions for many communities? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. Today, we're diving into an interesting development in the multifamily real estate sector. According to a report from Yield PRO, Echo Apartment Homes, a 38-unit multifamily community in San Bernardino, California, was recently acquired by Aspen Real Estate Financial LLC in partnership with the Housing Authority of the County of San Bernardino and Calaha for a remarkable $12.3 million. This acquisition marks the second time in the past year that Aspen Real Estate Financial LLC has utilized this unique partnership structure, having previously teamed up with Stanislaus Regional Housing Authority and Calaha to acquire another property in Modesto, California. The Housing Authority of the County of San Bernardino will be implementing a workforce housing platform at Echo Apartment Homes, where rent levels are structured to remain within workforce housing levels. This approach ensures that housing remains affordable for those who are often overlooked in traditional housing markets, without requiring a large capital contribution from the Housing Authority or its partners. The program is structured as a long-term lease-to-own arrangement, where Aspen Real Estate Financial LLC handles the capitalization of the acquisition, along with reserves to cover lease payments and operating expenses during economic downturns. The Housing Authority benefits 100% from the cash flow and the equity upside value, contributing positively to their long-term housing goals. Rishad Mitha, Deputy Executive Director for the Housing Authority of the County of San Bernardino, emphasized the importance of workforce housing in addressing the gap between subsidized housing and market rate rents. He highlighted that the purchase of Echo Apartments provides new housing opportunities for the community, aligning with their mission to provide housing opportunities without the need for significant capital investment. Matt Benwood of Lee and Associates LA North/Ventura, who represented the buyer, noted the ongoing shortage of workforce housing across Southern California and the United States. He pointed out that Aspen Real Estate Financial LLC's program focuses on acquiring existing Class A or B properties, allowing for immediate benefits compared to traditional rent-restricted development projects that can take years. Senior Vice President at CBRE, Carlson, described the sale of Echo Apartments as a landmark transaction, achieving the highest price per unit in over 2 decades for the city of San Bernardino. This sale showcases the strength of the Inland Empire multifamily market and the positive impact of strategic public-private partnerships on community stability and growth. Now, let's shift gears and talk about an exciting opportunity for homebuyers and investors looking to make improvements on their properties. The Canada Mortgage and Housing Corporation, commonly known as CMHC, has introduced the CMHC Improvement Mortgage Loan Insurance. This product is designed to provide greater financing choices for new construction and home improvements. Whether you're purchasing an existing home that needs some work or building a new home from scratch, the CMHC Improvement product offers insured financing up to 95% of the as-improved value for 1 or 2 unit owner-occupied properties and up to 90% for 3 or 4 unit properties. This means you can finance your residential property purchases or home improvements with lower down payments, making it more accessible for many Canadians. The program offers flexible advancing options for small or large-scale improvements and new construction. With insured financing up to 95% of the as-improved value, CMHC ensures that the property value is based on the lower of the market value or the purchase price and/or cost of construction. This is a crucial detail for anyone looking to make significant improvements to their property. For new construction, it's important to note that financing must be approved by CMHC before construction begins or at an early stage. The lender must maintain control of the entire building during the construction period, and any equity in the land must be used to facilitate construction and completion. It's worth mentioning that condominium construction financing isn't permitted under this program. There are various acceptable construction arrangements, such as owner-built homes, contract-built homes, and homebuilder pre-sold arrangements. Each of these options has specific requirements regarding title to the land and agreements with builders, ensuring that the project is managed effectively from start to finish. Another key feature of the CMHC Improvement Mortgage Loan Insurance is the Progress Advance options. For improvement costs that are 10% or less of the as-improved value, single advances are used. For costs greater than 10%, progress advances are employed. CMHC offers full service, where they validate up to 4 consecutive advances at no cost, and basic service, where the lender validates advances without pre-approval from CMHC. It's essential to determine the as-improved value accurately, which involves assessing the property on a dual basis, the as-is value and the as-improved value. The lending value is the lesser of the as-improved value, or the as-is value, plus the cost of improvements. Proper documentation, such as improvement lists, cost estimates, and renovation plans, is necessary to support the as-improved value. Eligibility requirements for the program include being a Canadian citizen, permanent resident, or non-permanent resident authorized to work in Canada. The loan-to-value ratios vary depending on the type of loan, with homeowner loans offering up to 95% for 1 to 2 units and 90% for 3 to 4 units. Small rental loans have a minimum equity requirement of 20%. This initiative by CMHC opens up new avenues for homebuyers and investors to improve their properties while managing their financial commitments effectively. It's a great move to help Canadians enhance their living spaces and increase the value of their investments. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.